It's time for Money for Lunch, where we feed your brain and your business with supersized portions of business and financial news. Now your host, Bert Martinez.
Hey guys, we are back. My next guest, Jim Conrad. Jim Conrad is one of the top bank on yourself authorized advisors in the country and is licensed and a licensed life insurance agent. He was inducted into the National Academy of Best-Selling Authors last September for co-authoring the Amazon #1 book, best-selling book, The Secret to Lifetime Financial Security. His website can be found at jimconrad.us. Boy, I tell you, money, there's another area that probably we all need help in. Jim Conrad, welcome to Money for Lunch.
Hi, Bert. It's an honor and a thrill to be with you.
All right, so let's just jump into this. I mean, money is one of those situations where a lot of us struggle in. I always say that I think as Americans we seem to have a weird love-hate relationship, or at least as human beings we have a love-hate relationship when it comes to money. So let me ask you off the top of the head, what's the secret to financial security? What is your take on that?
Well, it took me a long time to find the secret, Bert, but it is bank on yourself, and bank on yourself is a concept utilizing dividend-paying whole life insurance with special riders so that you become your own source of financing using your own capital. And like I said, it took me a long time to find it, 30 years. But once I did discover this concept, I quit doing everything else, became a bank on yourself authorized advisor, and this is all I've been doing for the last 8 years.
Okay, so were you doing something prior to getting into insurance and finances? Were you doing something else?
Oh, yeah, I was with a big company, corporate America, for 24 years after I graduated from college with an engineering degree. And
wow, okay.
For all those years, I put money in the 401k just like they tell you to do.
Yes.
And, I got the match and all that, and I thought I was cruising into retirement, and at the age of 47, I got laid off. So I had to figure out what to do with that 401k. I rolled it into a risk security like Wall Street tells you to do, and in 2001 lost more than half of it.
Yeah, baby.
So I've been in the same shoes that most people my age have been in.
Right. So okay, so this is I like this kind of story because again, you did not have a finance background or insurance background. You had an engineering background, and you obviously had this situation that really kind of woke you up and made you change careers. It sounds like.
Exactly. I did go to school at night and got an MBA in finance. So
okay.
I've always been interested in the financial arena. I always tried to help friends and, of course, manage my own financial portfolio. So when I lost my position, I decided that I was going to do something different. I was going to go out on my own and try to help people with their finances. And so I started doing that after I got laid off, and it took me a number of years, but I finally got to the point where I gave up on risk investments for me and for my clients because it just doesn't work.
Okay,
I found this concept.
Wait.
Wait.
All right. All right, so you're saying that you found a way to build wealth without risk. What the heck are you talking about? What do you mean?
Well, you just don't have to take risks to grow your wealth. You can win the money game without Wall Street. I know it sounds like heresy, Bert, but it can be done, and I'm living proof. I've been doing this myself for the last 8 years. I've helped hundreds of clients do the same thing, and at this point in my life, I've got enough capital in my policies, I own 6 so far, that I can finance anything I can afford myself. I don't need banks and credit card companies. That's financial independence and peace of mind in my book. So you don't have to risk your wealth to grow it. Wall Street wants to help you by managing your risk for a fee, of course.
Right.
You just have to make the right picks, and if you can't make them yourself, they'll be happy to make them for you. But
with no guarantee.
As I found out after 30 years of trying, it doesn't work.
Sure. Well, and here's the deal. You know, we see this all the time. You know, even the best money managers and investors typically don't make a tremendous gain on their money on a yearly basis. You know, we have one guy that I can look to, I guess two guys that we can look to as very successful investors, and that is Warren Buffett and his partner, Charlie Munger. So two out of millions of people that have crushed it investing. That doesn't give us a lot of hope.
Kind of like the lottery, right, Bert?
Yeah. I mean, you know, what's the chances, right? Okay, so let me ask you this. I want to dig a little bit deeper because you said you did all this using insurance policies, or did I hear you correctly? Life insurance policy? Walk me through this.
Yeah, this is a concept that takes advantage of a financial vehicle that's been around for 160 years. That's life insurance, whole life insurance. But it's just in the last 11 years that the bank on yourself concept has been employed. There's always been dividend paying whole life out there, but no strategy to really use it to your advantage. So that's the vehicle. What we do as bank on yourself advisors is to help people put money into that whole life and grow their cash value as quickly and to the greatest extent possible so they can become their own source of financing.
Okay, so let's say, Jim, I want to do this. I want to invest in a did you say, I'm sorry, is a whole life dividend paying policy? Is that what it was?
Correct.
Okay.
Dividend paying whole life's been around a long time. You want to make sure that you work with the right companies. That's what I bring to the table. I know who those companies are. And believe me, there's only a handful. But they have the policies we need, they have the riders we need, and so forth.
Okay, so here's my question. First of all, you know, life insurance, usually you have to be in pretty good shape to even get it. So you mentioned you started this at 47. Here I am, 51. Some of our listeners, viewers, are older. So what kind of qualifications do I need to get one of these dividend-paying whole life policies?
Well, the only qualification that you need to own a policy is to be able to fund it with premium. Whether or not you're insurable is not critical. You definitely want to insure yourself first. And I got my first policy at 54, but I took it out on my wife because I was uninsurable at the time.
Gotcha.
So you can own a policy on somebody else's life. If it can't be yours because you have some health problem, you can take the policy out and own that policy on your spouse, your children, your grandchildren, anybody you have an insurable interest in. So you can always bank on yourself whether or not you're insurable.
Okay, so the policy doesn't have to insure you. So let's say that walk me through your scenario with your wife. You insured your wife, but so obviously, unfortunately, if your wife passes away, you get to collect the life insurance. But how does the dividend paying work? Does that go into a joint account? Does it go just directly to her?
That's a good question. The policy is going to be owned by the owner, and the owner is the person who pays the premium. And the owner is also the person that manages any policy loan. So the insured person is simply the one whose life is being insured. You can own that policy. You can pay the premium. You legally own the cash value. You manage that and everything about the policy. The only difference is that upon the death of the insured, the death benefit's paid out to the named beneficiary, and that insured may not be you. But we want to insure you first. It just took a couple of years, and I became insurable, so I took out policies on myself.
Gotcha. Because you mentioned at the top of the segment you have 6 policies now.
I have 6 policies, and the reason that I have more than one is I started out with my first one based on the amount of premium that I thought I could pay. But after a while, I realized how powerful the concept is, and I started finding ways to fund my plan with more money. And a given policy that's in force has a maximum premium that can be paid each year, and I wanted to pay more than that, so I had to start another policy.
Gotcha.
So you can have as many policies as you want.
Okay, so let me ask you this, because, there's opposition in all things. So there is a line of thinking out there that says whole life is too expensive. Yes, you can get your money out of it, but there's a fee for that. What you should do is buy term life because it's so much cheaper, and then you invest the difference. What's your take on that?
Well, there are a couple problems with that buy term, invest the difference. The first one is that term life insurance is like renting a policy. You're only going to rent that policy for a period of time, let's say 20 years level premium. After 20 years, if you become uninsurable, the policy goes away and you have nothing. The reason that term insurance is so cheap is that the life insurance company very rarely pays out on a term policy because they've got the numbers and they figured out that they can offer that to you and never pay out. The other problem with it is if you take the money that you've got available and you pay a small amount for life insurance and invest the difference, most people don't invest that difference, and if they do, they're putting it in risk investments, and over the long term, as my case demonstrated, that hasn't worked out. So now you've got no life insurance, you're in your 60s, and your investments haven't panned out. You're kind of out of luck, aren't you?
Yeah. No, and I think you hit the nail right on the head. It's a great strategy on paper. However, you have two hurdles to overcome. A, are you disciplined enough to save and invest? And let's say that you are. Now the second hurdle is you just have to risk your money like we've all done, and those results have not been good and typically are not good. So I agree with everything you said, and I like the idea of what you said also about you're renting this. You at the end of 20 years, if you become uninsurable, you have nothing. You're done. They kick you out of the policy, and you're left with nothing. But with this whole life, if I understand you correctly, if for whatever reason I became uninsurable, then they could say, listen, you're uninsurable, but you can walk away with all of this money that's in the policy. Is that what I understand?
That's true. The other thing, Bert, is that once you have been approved for a whole life policy, this is a permanent plan. In other words, you can hold this policy as long as you live, whereas term is limited to that term. A whole life is a permanent policy. So as long as you pay the premium, you've got that policy as long as you live, even if it's to 120.
I love it. Hey, Jim Conrad.
One more thing.
Go ahead.
To bolster what we were saying about, risk investments not working for people, the statistics, recent statistics are that for 401k and IRA balances for the typical household or the average household nearing retirement, in 2010, they had $120,000 total savings for retirement, and by 2013 that had fallen to $111,000. So the average 401k IRA investor out there has only about $100,000 saved up for retirement. That's not going to last too long. No.
You know what I'd love to do, Jim, is I'd love to bring you back and maybe talk about some success stories, some real-life examples. Guys, if you're interested in talking about with Jim about what he's doing with this dividend-paying whole life thing, check out jimconrad.us. That's .us. Jim Conrad, thank you so much for stopping by and sharing.
It's been great, Bert. I appreciate it. Thanks. All the best to you.
Guys, we're off and running. I love this idea of this dividend life-paying policy thingy. I'm going to check it out, see if it's something that you want to do. As always, I want to say just thank you from the bottom of my heart. We appreciate it. And remember, you were created to
Tune in Monday through Friday here on Money for Lunch. And check out our website at moneyforlunch.com.